Something amazing is happening right now. Around the world, private credit is growing and growing. According to Moody's 2026 outlook, they project a continued and rapid growth for the private credit market worldwide, with global assets under management set to exceed $2 trillion in 2026 and increase to $4 trillion US by 2030. Growth is shifting from traditional corporate lending toward asset-backed finance, driven by rising merger and acquisitions and leveraged buyout activity, and demand for consumer data infrastructure loans continue to outpace. Other notable insights from Moody's include rapid regional expansion. Growth is accelerating inside and outside the US, noting Canada, the EMEA and APAC areas. Now you combine rapid private credit growth with embedded mortgage finance, something amazing happens. The global embedded finance market is experiencing rapid expansion, with projections indicating it will exceed $7 trillion by 2030, driven by a compound annual growth rate (CAGR) often estimated above 30%. The opportunity to own the rails is now with goGreenLight loans. But in Canada and other areas, something different is happening, quietly and fueling growth. Regulatory changes have permanently shifted millions of creditworthy borrowers out of the banks and into private lending. This has created a large, real asset-backed private credit market without modern infrastructure. Canada today looks like the US private credit market did years ago: strong assets, strong demand, but no dominant operating system. That's why we built goGreenLight Loans. It's Canada's first embedded private lending marketplace, a secure digital environment where borrowers, brokers, lenders, lawyers, and investors all operate inside one unified system with a centralized wallet. Every user is verified. Every document and digital mortgage package is securely shared. Every risk is visible. For investors, this creates two distinct opportunities. First, debt capital. Through GreenLight Capital LP, investors access a portfolio of Canadian residential mortgages secured by real estate, digitally audited and transparently managed, targeting steady, predictable returns. Second, equity capital. Select partners can participate in ownership of the platform itself, the infrastructure powering this market. This is about owning the rails, not just the yield. Markets like this don't stay open forever. Once infrastructure is established, late capital competes, early capital compounds. Canada is still early. If you'd like to explore this further, review the materials below and simply reply debt or equity, or both to continue the conversation.